Hello everyone, welcome to the latest TM Brunsdon market update. I hope that you're keeping safe and well as we continue to ease out of lockdown. I'm pleased once again to have with me Jonathan Webster-Smith, the investment manager from Macdonald, who will be answering a few topical questions. Good morning, Jonathan.
Morning, Brian.
If I can ask initially a couple of questions on the USA. The Fed has recently extended the bank emergency lending program, but markets were down. Should investors be concerned about this, Jonathan?
Well, I think that's the $1 million question at the moment. I mean, if we just do a small recap, we had the US market, along with most major markets, down 44% in March. Since then, since those lows were tested, we've had $20 trillion of support, 8.5 trillion of monetary support, and indeed that amount plus some positive, just some movements about the global economies opening up has indeed for the S&P 500 seen those losses reversed, and yet we've just had the print from the US, which is showing GDP down 33%. So quite clearly, markets are effectively in this limbo. We've had the fall, we've had the government support, and we've had the rally. And the question is, where do we go next? Now, the announcement from the Fed was perhaps in advance, which is not normal from their meeting. So expectations from that meeting hopefully are a little bit more muted. We really need to see what is going to happen in corporate earnings. We need to see GDP start to improve and unemployment coming down. I think for the market to take a next leg up, clearly, if we get more negative news, I think we could well see further contraction. So, I think market is perhaps just saying, well, it's had a good rally, yeah, and we are expecting government support to continue. Now it's really handing over to the corporates, and there's a lot of announcements in the S&P 500 coming this week, so that will give us much greater clarity on some of the earnings.
So keeping a watching brief on it then. Moving on to China, lots of issues here, Jonathan. US technology has been falling with the global tension between China and the USA rising, but corporate results have been better than expected. What can we make of this?
Yeah, I mean, it could just be one of these coincidences, but obviously, geopolitics clearly isn't stopping. It's there, and come what may. And whilst we're all in the middle of a health pandemic, and we would perhaps like to see that as the priority, clearly election cycles continue and political cycles continue. And you're absolutely right. What we've seen is an increase in tensions continuing. I point out, not done over the last couple of weeks. Technology companies, and it's worth pointing out that technology companies have had an absolutely stellar run in the last 6-7 weeks. I mean, if you draw a graph, it's sort of very simplistically going like that. So you could argue it's simply some profit taking was, but then equally, a lot of the technology components and technology production is based out of China. So clearly there is a link and a fall there. What we've seen over the last few evenings, particularly sort of Thursday, Friday last week, is we had some excellent results from some of the big tech companies, Amazon and Apple, just to name a few. And obviously those share prices have then moved back up, which perhaps links that to my earlier question that it is going to be corporate earnings led. However, the US and China are 75% of global GDP. We can clearly see as tensions, and indeed if tensions continue to escalate, and we are running into a US election cycle where he would want to be tough on China, we can clearly see that there is a huge potential impact on the US. And given the rally we've had there, I think the longer and deeper these tensions run, perhaps the more concerned for markets we should be. So again, it's a bit of a wait and see. But I think if we can, the market really needs to see a smoothing of those tensions, and we don't seem to be in that category at the moment.
Okay, sticking with China for the time being, Chinese manufacturing data was better than expected. Do you see this possibly as the start of the recovery that people are talking about?
Well, I mean, people have been talking about V-shaped recoveries, U-shaped recoveries. Obviously the government support and the monetary support they provided to employment around the globe has been widely, is really been a positive and given people encouragement that we can see this V-shaped recovery, particularly as coming out of June and July, economies were reopening. There is a catch-22 here. Yes, the PMI print from China was 52.8. Last month it was 51.1, and I believe the consensus was around a fall from that figure to 51.1. So clearly, quite a significant improvement, and that's really been an increased output and new orders. So in itself, that's a really positive sign that Chinese manufacturing is improving, and indeed that would therefore give you that is the start to the recovery. However, in those data, export orders were weak, and then we look at what's going on around the world, and it's very much lockdown is being reversed in localized areas. No one's going necessarily for a full national lockdown again, but we're seeing greater lockdown in areas, and that is having a negative impact on certain parts of the market or certain markets in general. However, so we've had the Chinese PMI. We've also had an improved print from Europe, following better numbers from Germany. We've had positive reports coming out from Italy and Spain. The Eurozone have just approved a 6 billion state aid support program for 3 Italian companies. So there is still a great deal of optimism, that the governments will continue to provide the required support for corporates until we get to a position where economies start to reopen. I think it's personal opinion. I think it's a little bit early. It is a very positive sign. Obviously, the virus started in China, so you'd hope perhaps that there is that. Well, it started there, so actually perhaps this will then lead some improvements in global prints. But clearly, we're starting to see counter headlines to that where lockdowns are improving. So I would probably say it's a little bit early. It's a very positive, and it's definitely an encouraging sign. But we'd want to see a bit more consistency and a continuation and perhaps a broader global improvement before we start sort of commenting that this is a V or a U shape in terms of recovery. But nevertheless, a positive announcement this morning.
Well, reasonably encouraging, and let's hope the trend continues. That's it for now. So I'd like to thank Jonathan, and I'd also like to thank you very much for watching. And as always, if you have any questions or queries, please be in touch with us. Thank you.